Thanks for watching this video from NetPicks. And today we're going to talk about 3 simple tips for using technical analysis. And really, when it comes to trading, there are 1,000,001 strategies that you can use. But one of the most important aspects of trading is technical analysis. And there are some traders that are going to shy away from it because they perceive it to be a little bit too complex. But overall, it can be a very effective tool if you use it correctly. Now, what it does, technical analysis, it aims to give traders an edge in the market by helping them to identify trading opportunities that they may not be able to find just using fundamental analysis of the market or an individual stock. And the good thing about technical analysis, you can use it to trade long-term, short-term trends, and also help you make decisions about when you're going to enter a trade and when you're going to exit it. The bottom line, it's not just another tool, but it's a powerful tool. And it can help you guide your stock selections, your entry points, your exit points, even the location of your protective stop loss. Now, it's not infallible. Okay, it's not going to guarantee any percentage of winning trades, but to help put you on the right foot, I want to talk about 3 important tips that you should think about. The first one is always think in probabilities when you're making trading decisions. Now, a lot of people think that trading is just about making quick, informed decisions, cashing in on your profits. But there's another important aspect of trading that people often overlook, and that's probability. And all probability is the chance that something specific will happen. And it plays a crucial role in our trading. Nothing is 100% in trading. Nothing's guaranteed to predict future price movements. So it's really important that you consider the likelihood of different outcomes when you make any trading decision. So for example, if you're considering buying a stock due to the price action that you're seeing, you're going to want to weigh the probability of the stock going up against the probability of it going down. So how do you do that? Well, you make sure you have a tested trading plan. Ensure you're disciplined in following it whenever you're trading. For example, technical indicators like support and resistance levels, moving averages, momentum indicators, Keltner channels. These can help give you the idea of the probability of a stock moving in a certain direction. Candlestick chart patterns that show certain characteristics can point to one thing happening over another. For example, if price is coiling into a resistance zone, the probability is that it's going to break to the upside. But it's important to remember that technical analysis is not an exact science. There's always going to be some element of risk involved. But with the proper planning and discipline, you can minimize those risks and increase your chances of success. The second one is identify the longer-term trend. So if you're like most people when it comes to trading, you're always looking for which way the market's moving, the trend. After all, it's the trend that provides profits, yeah? Well, yes and no. The trend is your friend's old saying, but it's your friend only if you know how to identify it and trade with it. If you don't, that trend is going to become your enemy. But unfortunately, that trend direction is not always easy to find. It's because there's 2 types of trends, short-term, long-term. I guess there's 3. There's no trend. And as you might expect, short-term and long-term trends, they don't always move in the same direction. Different time frames can have different technical trends. Weekly charts can look different than daily charts. So to make things even more difficult, trend direction can change over time. So even if you identify the trend today, that doesn't mean it's going to be the same tomorrow. And this is especially true for those who prefer day trading who are using lower time frame charts. You can even consider the trend on one time frame as your main trend direction. On the lower time frame for setups, you would use the higher time frame trend direction for your direction. The good news is there's a few techniques you can use to help identify trend. One is just to look at moving averages of various lengths. Some examples, you got a 10 SMA or a 30 SMA on your weekly charts, a 20 or a 50 for trend direction on the daily chart. Another option, just use a moving average crossover for trend direction, such as the 1030 cross. Some traders are going to use trend lines. Others are going to use support and resistance levels to determine trend. But by using these techniques, you actually give yourself a better chance of correctly identifying the trend direction and hopefully making profitable trades. The third, probably the most important one, is having a repeatable trading process. So before you place any trade, whether it's stock, crypto, or just a simple options contract, you need to have a trading strategy in place. This strategy has to be something that you can repeat and follow every single time you make a trade. That way, you can ensure that you're being consistent and you're being disciplined with your trading. Having a process will also help remove some of the emotions from the equation. After all, it's natural to feel emotionally attached to our trades. It's money, right? But if we allow our emotions to guide our trading decisions, we're more likely to make impulsive and irrational decisions. These decisions absolutely can be profitable, but in the long term, they are destructive. So before you enter any trade, make sure you have a trading process of sorts in place that you can follow without fail. And doing that, it's going to help you to remain disciplined. And in the long run, you're probably going to avoid making some pretty costly mistakes. You want to know the price levels where you're going to enter. You want to know your profit targets or your means of taking profits. You want to know where you're going to exit your trade if you're wrong, how much you're going to risk. There's a whole bunch of things. But as long as you have a clear trading plan, one that's been tested, that you see has an edge, and you can follow it, you could be on your way to becoming successful. However, before you start trading, you got to make sure you understand what you are getting into. Right? Trading, a lot of risks, but there's also some really big potential rewards. So these are 3 simple tips. I think they can help you get started with technical analysis, make it work for you. There's a ton of videos on our channel here about technical analysis. You always think in probabilities when making trading decisions. Identify the long-term trend and have a process of trading that you can repeat. If any of these resonate with you, just give them a try. Let's see if you can improve on the results that you're getting. And just remember, there's no one perfect way to trade. You got to find one that works best for you, and you got to stick with it. Thanks for watching. Subscribe to our channel. Like this video. Any questions or comments, pop them below. We'll talk to you soon.